Let's get straight into this activity. We've got the rally having gained further momentum yesterday and pushing the NSE 20 share index further past that 4,000 mark. I was saying yesterday it's a key psychological point at this stage of the game. How are you reading the kind of activity that's been playing out?
Thank you very much, Alishia. Always a pleasure. Just like you've mentioned, and most of the pointers that you highlighted earlier, we are seeing the economy is fairly stable at this moment. We are seeing inflation levels are very low, which is a good indicator, and particularly the interest rates, which had been very high at the beginning of the year and most of last year. And because of that, we are seeing a lot of flight to quality, and most investors are now looking at what they can be able to get from the equity market. Just like someone also mentioned, the bond market, you're seeing a lot of liquidity, oversubscription on a lot of these things, which is already an indicator that we have a lot of money chasing after very good value stocks. And because of that, I guess going forward, especially now that we've hit the 4,000 mark, it's already psychologically a reality, and hopefully we're going to continue seeing that trend going forward.
It's interesting that you say you're looking at a stable economy, because looking at some of the headlines that have come through from Kenya, we're reading things like Kenyan policeman injured in Coast Province, a grenade attack. The East African nation has been hit by a series of grenade and gun attacks since it sent troops into Somalia last October. How is that, if at all, having an impact on sentiment right now?
Well, definitely there's a bit of a concern in terms of the political as well as security front, but we have been able to make a lot of milestones. Just recently we managed to a lot of success in terms of Somalia, and even right now we are celebrating a lot of that, and definitely we would expect a bit of retaliation regarding that, and also the fact that we are still experiencing a bit of political risk because elections are nearing. And I guess some of the indicators we are looking at, when you look at US and the Kenyan economy in terms of and politics and all that, we are a bit concerned about how we'll be able to pull through this transition. But in terms of the economic front, we are seeing the government being very clear and sending very strong signals that it will make sure that ensure that the economy is fairly stable and strong at this moment. But definitely there are underlying factors which are a bit of a concern, and hopefully as we go on, we are going to see a lot of direction in terms of that front.
While that happens on the macro scene and on the political front, Samuel, it seems investors paying more attention to company-specific developments and a specific focus on earnings. There were great expectations as far as Uchumi's results were concerned, and yesterday the company reporting pre-tax profit dropping 21.7%. What did you make of the kind of numbers that came through yesterday?
Well, in terms of the performance for Uchumi, I think that's one of the stocks that has been quite a stock to watch, especially the fact that it's the only retail chain company that is listed on the market. And because of that, there is not much comparison in terms of how it performs with others, especially now that the others do not publish the results. But looking at it in terms of how it has performed ever since it was listed, I guess the goodwill that it has had from a lot of Kenyans has buoyed the share in terms of the interest for the company. And also the price to earnings ratio has been fairly low, which has made a lot of people want to still buy into the stock. But look at it in terms of their kind of announcements and indications that they are giving. When a company starts giving dividends, I guess most investors, especially in the Kenyan market, tend to believe it's a sign of goodwill that going forward the company will do well. And also in terms of their expansion plans, I guess what we're trying to see here is that they're expanding but a bit cautiously. And because of that, I guess that could be one of the reasons why they were not able to perform very well. Just like you mentioned, their costs went up slightly, and I guess that could be because of the expansion. And hopefully I think going forward the numbers will continue showing good performance. And I guess in terms of their positioning, as well as in terms of the goodwill that they already have, I guess most investors are very positive and optimistic about the future of the company.
Run us through some of the detail that was provided with regards to the company's expansion strategy from here on out, because if that's what's eroding some of the earnings potential of this company for now at least, and with the promise of long-term returns, investors pretty interested in that strategy and just how aggressive an expansion strategy this company is actually looking at.
Yeah, looking at it in terms of especially expansion, we're seeing them opening new branches within the country, and also they're trying to explore the region, which I guess most other retail chains have already gone into. But looking at it in terms of their positioning, I guess what is a bit of a concern now is what we had mentioned earlier, inflation levels and those kind of things affecting it. But in terms of how it is performing, and especially in terms of their expansion plans, we are seeing them being cautiously expanding. We're not seeing them being very keen on issues to do with debt. So most likely they might want to use their reserves, which are pretty high, to be able to still finance some of this expansion, and at the same time still keep shareholders happy in terms of the returns that they give them, in terms, especially in terms of things like dividends which they're announcing, and also looking at the share appreciation which has been very strong over the past 1 year.
Where they are being cautious, to what extent do you price in risk that this is a player that may lose some of the advantage and competitive advantage moving forward? Samuel, we've been talking over the last couple of days of other retailers making ground in Kenya as well, and specific mention of Mauritian furniture retailer Courts coming into this Kenyan retail landscape.
Well, looking at it in terms of the expansion, especially noting the fact that one of the reasons why Uchumi went under was just because of uncontrolled expansion, because they were expanding, but they were not very careful in terms of how they went about it, especially balancing their asset base, and because of that, I guess that was the reason why they went under. Those are some of the things that I believe the CEO currently is being very keen on, just to make sure that they do not get repeat that. And I guess one of the major pluses for Uchumi is that because of what they learned from that, I guess they're trying to be very careful in terms of how they expand, but definitely we cannot rule out the aspect of competition, which is, I think, a major factor that might still affect them. But in terms of goodwill, I think that's one of the major strengths that they have, because the government owns a stake of Uchumi, so I'm sure maybe they might continue giving them a lot of leeway in terms of how they're able to perform and operate within the country. And also in terms of the Kenyan people, I think they're very keen in terms of supporting their own. And I guess that gives them an edge in terms of the competition, but definitely they need to still be very keen in terms of ensuring that they manage their bottom line as well as their top line.
Very quickly, take us through your expectations for the banking earnings. I mean, I mentioned earlier that we had the banks dominating the list of top gainers in yesterday's session. A Standard Chartered leading the gainers list, climbing 2.3% by the close.
Well, Q3 earnings are just about to come out, and I think there's already a very strong indicator that the banks are doing fairly well. We've seen KCB now crossing the 28 shilling mark, almost going towards 29. We're seeing Standard Chartered also doing the same. And also the other things that are also creating a lot of interest in terms of the banking stocks are the rights issues. We had Diamond Trust, we had NIC, we currently have Standard Chartered and CFC. And because of that, I guess a lot of this focus is being put on some of these banks. And I guess the strong issue right now is to see how they're going to be able to still sustain their performance, because their half-one results were very good for most of them. And I guess right now that you're expecting Q3, Q4, and a lot of the reserves to also be put into consideration, preparation for provisions for losses in terms of performance, definitely is also going to come into some of these numbers, and hopefully they're going to still sustain their performance. And I guess right now the expectation is very strong, and hopefully they'll be able to still meet that.